Venture capital has been the driving force behind some of the most transformative companies in history. While Silicon Valley stands as the quintessential example of a thriving VC ecosystem, numerous other global hubs have emerged, each contributing uniquely to the innovation landscape. The origins of Silicon Valley can be traced back to the early 20th century, with significant contributions from Stanford University and the U.S. Department of Defense. Stanford's emphasis on fostering entrepreneurship led to the establishment of the Stanford Research Institute in 1946, which became a catalyst for technological advancements. Simultaneously, the Department of Defense's investments in research during World War II and the Cold War era spurred innovations in electronics and computing. A pivotal moment occurred in 1957 when 8 engineers, later known as the Traitorous Eight, left Shockley Semiconductor Laboratory to form Fairchild Semiconductor. This move not only led to the creation of a leading semiconductor company, but also laid the foundation for the region's entrepreneurial culture. Arthur Rock, an early venture capitalist, facilitated the financing for Fairchild Semiconductor, marking one of the first instances of modern venture capital investment. The 1970s saw the formalization of venture capital as a distinct industry. Firms like Kleiner Perkins and Sequoia Capital, established in 1972, were instrumental in funding startups that would become tech giants. Their presence on Sand Hill Road in Menlo Park became synonymous with venture capital investment. The success stories of companies like Apple, funded by these VC firms, attracted more entrepreneurs and investors to the region. The symbiotic relationship between innovative startups and willing investors created a self-reinforcing ecosystem, solidifying Silicon Valley's status as a global innovation hub. While Silicon Valley remains a beacon, other regions have cultivated vibrant VC ecosystems. For example, in China, cities like Beijing and Shanghai have become significant players in the venture capital scene, with successful companies such as Alibaba, Tencent, and ByteDance showcasing the country's strong venture capital environment. Regarding the United Kingdom, London has solidified its position as a leading VC hub in Europe, attracting substantial investments in fintech and other tech sectors. Additionally, cities like Oxford and Cambridge are experiencing significant booms in investment, particularly in science-based businesses, with international investors recognizing vast opportunities in these areas. Moving to the Middle East, Dubai has emerged as the fastest-growing VC hub globally, reflecting the region's strategic initiatives to foster innovation and attract international investments. Finally, Latin America has seen a significant rise in venture capital activity. This growth underscores Latin America's burgeoning startup ecosystem and its increasing appeal to investors. The rise of global venture capital centers can be attributed to a confluence of several key factors, each playing an important role in shaping these thriving ecosystems. One of the most critical drivers is the presence of strong educational institutions. Universities that prioritize research and entrepreneurship not only produce highly skilled graduates, but also act as incubators for innovation. A prime example is Cambridge University, whose deep-rooted culture of research excellence has significantly contributed to the city's dynamic startup scene, fueling its ambitious efforts to solidify its status as a leading global innovation hub. Government support. Policies that encourage innovation, provide tax incentives. Government support is another essential ingredient. Forward-looking policies that promote innovation, offer tax incentives, and invest in research and development create an environment where both startups and investors can flourish. Saudi Arabia's Vision 2030 strategy stands out in this regard, emphasizing major investments in advanced industrial and climate technologies as part of a broader push to diversify the nation's economy and open new avenues for venture capital. Equally important is the quality of infrastructure and connectivity. Cities that boast modern facilities and strong links to global markets naturally become attractive destinations for business operations. Abu Dhabi, for instance, has witnessed a 31% surge in company registrations within its financial center, a testament to its concerted efforts to establish a business-friendly environment that draws leading firms from around the world. Cultural attitudes towards risk also play a pivotal role. In regions where failure is seen not as a stigma, but as a valuable learning experience, entrepreneurial activity tends to thrive. Societies that embrace this perspective often see a higher rate of startup formation, driven by innovators willing to take bold risks. Finally, access to capital remains fundamental. The availability of venture capital firms prepared to invest in early-stage companies creates a supportive financial ecosystem where new businesses can take root and scale. Cities that successfully nurture vibrant investor networks provide fertile ground for startups, further reinforcing their position as global centers of innovation. Although the rapid emergence of global venture capital hubs is an encouraging development, it is important to recognize that several significant challenges remain. One of the foremost concerns is talent retention. It is no longer enough for cities to simply create job opportunities. They must also cultivate an environment that offers a high quality of life, making them truly attractive destinations for skilled professionals. Without this, even the most vibrant job markets may struggle to hold onto their top talent. Another critical issue is the sustainability of investment. Venture capital hubs thrive on a continuous influx of funding, but maintaining this momentum can prove particularly difficult during periods of economic instability. Building resilience against market fluctuations is therefore essential if these hubs are to achieve lasting success. Finally, the regulatory environment presents its own set of complexities. Policymakers face the challenging task of crafting frameworks that support business growth without imposing restrictions that could dampen innovation. Striking the right balance between oversight and flexibility is crucial if global VC hubs are to realize their full potential. The evolution of venture capital began with the rise of Silicon Valley, where a unique blend of academic excellence, government support, and entrepreneurial spirit laid the groundwork for a powerful innovation ecosystem. Today, new global hubs such as London, Beijing, Dubai, and Sao Paulo are emerging, each contributing distinct strengths to the venture capital landscape. These ecosystems thrive due to key success factors like strong educational institutions, supportive policies, modern infrastructure, a culture of risk-taking, and access to capital. However, ongoing challenges such as talent retention, investment sustainability, and regulatory complexity must be addressed to ensure long-term growth and resilience. The venture capital landscape is dynamic, with emerging hubs contributing to a more distributed global network of innovation. As technology continues to evolve, areas such as artificial intelligence, biotechnology, and clean energy are attracting significant investments. The decentralization of venture capital suggests a future where multiple regions collaborate and compete, driving global innovation forward. In conclusion, while Silicon Valley's rise as a venture capital powerhouse set a precedent, the emergence of global VC hubs signifies a broader distribution of innovation. This global expansion enriches the entrepreneurial ecosystem, fostering diverse solutions to the world's challenges.